Gold. It's been the go-to investment for centuries, right? But here's the question. Could gold hit a new milestone before 2026? With inflation surging, economies in flux, and central banks on a buying spree, we might just see gold break past its all-time high. Stick with us as we dive into why gold could be on the verge of a new golden age and what that might mean for you as an investor. First, let's take a quick look at why gold has remained a top-tier investment choice. Even in the digital age, gold has proven itself to be the safe haven during turbulent times, whether it's inflation, currency devaluation, or geopolitical instability. Gold always seems to find its place at the top of investors' minds. In fact, gold prices have surged more than $1,500 per ounce in the last decade. As of 2025, the price of gold is hovering around 95,000 rupees per 10 grams in India, which is quite a jump from the 30,000 rupees mark we saw about 10 years ago. As a matter of fact, gold already made headlines when it almost crossed the 1 lakh rupee per 10 gram mark in April. And this upward trajectory doesn't seem to be slowing down anytime soon. Now let's dive into the factors that are driving this meteoric rise. We have all heard about inflation and how it eats into the value of money, right? Well, gold tends to act as a hedge against inflation, which is why its appeal increases when the global economy is feeling shaky. And to this, the growing global uncertainties, from trade wars to political tension. And it's clear why gold is seeing more love from investors. And don't forget about central banks. Since 2018, central banks have been net buyers of gold for the first time in decades. Just last year, the World Gold Council reported that central banks added a record 1,000 tons of gold to their reserves. Yes, you heard that right, 1,000 tons. This kind of institutional demand is bound to push prices higher. So what's the big question? What milestone could gold hit before 2026? Some analysts are predicting that the price of gold could cross that 1 lakh rupee per 10 grams milestone by the year 2026, driven by continued global demand and economic volatility. Why? Digital gold investments, especially in India, are on the rise. We are seeing more people buy gold in the form of ETFs, sovereign gold bonds, and even digital gold, which are more accessible than ever before. This growing trend of investing in gold digitally is fueling its demand, particularly among younger investors who are tech savvy but want to park their money in a safer asset. Then there's geopolitical instability. With tensions between countries and the looming fear of recessions, gold tends to perform well as a safe haven asset. As a result, more investors are expected to turn to gold as a long-term strategy. Now let's focus on India, because we all know how much we love gold. India is the largest consumer of gold in the world, importing more than 800 tons in 2024. And whenever festivals like Diwali and the wedding season are around the corner, we see a significant jump in gold demand every year. Interestingly, India's middle class is growing rapidly, and more people are becoming aware of the role gold can play in diversification and wealth preservation. This growing demand, combined with the weakening rupee and high inflation, could push prices further. So in the Indian context, gold might even break new records before 2026, especially if global factors align. Now, before you rush off to buy a gold bar or dive into the world of gold ETFs, let's talk about a few risks. Firstly, volatility. While gold is considered a safe haven asset, its price can still fluctuate, especially in the short term. So if you're looking to make a quick profit, gold might not be the answer. Second, interest rates. When central banks hike interest rates, it can create a negative impact on gold prices. Gold doesn't pay interest, so higher rates often make it less attractive compared to fixed income investments. And finally, currency movements. If the US dollar strengthens, gold tends to weaken. So keep an eye on global currency movements, especially the dollar, when you are making your decisions. So what's the takeaway? Gold is likely to continue its upward trajectory, but as with any investment, it comes with its own set of challenges. While the 1 lakh rupee per 10 grams target might be in the cards, there's always the risk of short-term fluctuations. If you're thinking of investing in gold, consider diversifying your strategy. Maybe a mix of physical gold, ETFs, and sovereign gold bonds, depending on your risk appetite and investment goals. If you found this video helpful, hit like, subscribe to Markets for You for more insightful financial content, and drop a comment below. What's your gold investment strategy? Are you holding on to physical gold or are you betting on digital gold? Let's discuss.